For years, critics argued that GameStop's turnaround story depended on hype rather than fundamentals. But a series of reported developments over the past several days has completely changed the conversation. According to recent regulatory disclosures, GameStop is now projecting adjusted EBITDA of more than $600 million for fiscal 2026, while also increasing its reported economic exposure to eBay to roughly 7.8%. And with the company's annual shareholder meeting approaching on July 7th, investors believe the next few days could become one of the most important moments in GameStop's modern history. So the question isn't whether GameStop is making headlines. The question is whether Wall Street is underestimating how quickly the company is changing. Let's break it down. The biggest surprise came from GameStop's updated financial outlook. In a recent filing, the company projected adjusted EBITDA exceeding $600 million for fiscal 2026. If achieved, that would represent a substantial increase from the prior fiscal year and would mark one of the strongest operational improvements in the company's recent history. Why is that important? Because one of the longest-running bearish arguments against GameStop has been that the business could not consistently generate meaningful operating earnings on its own. A sharp improvement in EBITDA doesn't automatically solve every challenge facing the company, but it would suggest that GameStop's underlying operations are becoming significantly stronger than many investors previously expected. And when companies materially improve profitability, analysts often revisit valuation models, earnings forecasts, and long-term expectations. That alone would make this an important development. But it wasn't the only one. Another filing attracted just as much attention. GameStop disclosed that it has expanded its reported economic exposure to eBay to approximately 7.8% through a combination of direct ownership and other financial instruments. At first glance, that may sound like just another investment, but investors believe it could represent something much bigger. Earlier proposals involving eBay were reportedly rejected. However, GameStop has indicated that it intends to continue pursuing its strategic plans and release additional information regarding its integration strategy. If that happens, the conversation could shift from a simple investment to a much broader corporate strategy. Whether any transaction ultimately moves forward remains uncertain. Major corporate combinations require numerous approvals and can change at any stage of negotiations. But the fact that GameStop continues increasing its reported exposure suggests management is still actively pursuing opportunities beyond its traditional retail business. And that's exactly why investors are paying close attention to the upcoming shareholder meeting. Scheduled for July 7th, the meeting arrives at a particularly interesting moment. Recent legal challenges related to proxy voting have added uncertainty, but the company has continued preparing for the meeting as scheduled. For many investors, this isn't simply another annual corporate event. It's viewed as an opportunity for management to provide greater clarity on its long-term strategy, capital allocation priorities, and future business direction. Some shareholders are also watching for any updates regarding the company's previously announced share repurchase authorization, although there is no guarantee that any action will be announced during the meeting. Still, major shareholder meetings have historically been periods of heightened volatility, especially for companies with highly engaged investor communities. But there's another reason GameStop continues attracting attention. The company's financial position has changed dramatically over the past few years. Earlier concerns about liquidity have largely given way to discussions about capital deployment. Instead of asking whether the company has enough resources to survive, investors are increasingly asking how management plans to use its financial strength. Whether that's acquisitions, technology investments, shareholder returns, or expanding existing business segments, capital allocation has become one of the biggest questions surrounding the company. Now combine everything together. The company is projecting significantly stronger operating earnings. Management continues pursuing strategic expansion opportunities. An important shareholder meeting is only days away, and investors are waiting to hear more about how GameStop intends to deploy its growing financial resources. Of course, it's important to recognize that none of these developments guarantee a higher stock price. Corporate strategies can evolve. Regulatory processes can take time. Market sentiment can shift quickly. And broader economic conditions will continue influencing trading activity regardless of company-specific news. But one thing is becoming increasingly clear. The GameStop story today looks very different from the one investors were debating just a few years ago. Instead of focusing exclusively on short interest and volatility, the conversation is increasingly shifting toward profitability, corporate strategy, and long-term capital allocation. Whether that transformation ultimately results in a different market valuation remains to be seen. The next major clue could arrive as early as the July 7th shareholder meeting. Investors will be watching closely for management commentary, strategic updates, and any announcements that provide additional insight into where GameStop is heading next. For now, one thing is certain. The coming days could play an important role in shaping the company's next chapter, and both investors and analysts will be paying close attention to every update. If you enjoyed this breakdown and want more in-depth coverage of GameStop and the biggest market-moving stocks, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss our next analysis.